to ask sort of what the key points we discussed were in a brief summary of sort of the most important elements of financing.
Sure. I mean, I think what we're seeing really in the European credit markets is a few key themes that are causing change. Really, some of the key themes really are, the Basel III rules coming into effect starting in January of next year. It's a 5-year phase-in. It's creating balance sheet pressure on commercial banks as they need to delever. And so they, as a traditional source of credit funding, are we think, shrinking. We're also seeing the CLO market in London really shrinking as well. These are vehicles formed in 2005, 6, and 7, and as a source of credit, this is also a melting ice cube where we're seeing about $25 billion of liquidity evaporating from them over the next 4 years. And so what we're seeing is there's going to be a new need for other alternative forms of capital to fill that void. We think that's going to be increasingly in the form of high-yield bonds or investment-grade capital markets debt. We also think there's going to be a need for more credit funds to fill the void of the CLOs. And then finally mezzanine as well. So we are seeing a sea change in terms of investor composition over the next few years supporting debt.
But I think in general, so even though we're sort of seeing a shift in liquidity and where financing sort of means are coming from, is it fair to say that sort of the Nordic markets are still a healthy market for raising finance and also for banks to provide finance?
Very much so. I mean, I think what we're seeing is that the attractive spread levels that we're seeing in the loan market plus pretty healthy upfront fees means this is a pretty interesting space for banks to stay in. Now, as mentioned before, there are balance sheet constraints causing them to be more selective and also be willing to hold less on a given name basis, but they're still very much open for business. So, and plus the macroeconomic outlook in Scandinavia is more positive than we're seeing in the continent, certainly. So I think all these factors are mean that the markets are very much open for issuers to achieve credit, but it certainly is going to be more tricky in terms of getting the ideal composition to maximize terms.